Hello everybody. So the market is closed today, so I'm taking some time to update my spreadsheet, and there are also a few stocks that stick out at good valuations, and so I want to talk about these today and kind of what my thoughts are. So the first stock, of course, is Duolingo. Duolingo actually bounced back. It's back up 40% compared to the April low. It had reached a low then because, of course, everybody was saying AI was going to replace language learning apps, and people were just going to learn through AI, kind of like similar when Google stock dropped because people were going to stop using Google search and people were going to just use AI for everything. They've had kind of a flat quarter at one point, but that was due to changes in their algorithms and changes in the way they monetize their app rather than changes to the actual demand and engagement on the platform. The engagement on the platform is actually really good, as strong as ever if you pull up the investor presentation and look at it. And it really seems to me like the market simply freaked out. This is why this was a stock that was $500 in May 2025. And now it's a stock that is still down 75%, but at one point this stock was down 85%. Enterprise value over gross profit over revenue growth is a 0.27. It's still cheap. It's under 0.3. Now, it's not cheap. It's not as cheap as the other stocks that I have on this spreadsheet. But one has to understand that Duolingo was widely regarded as one of the top stocks out there, with one of the top management teams, best management, best app, best in class. And, kind of in line to revolutionize a lot of education. Of course, it starts with language, and they've done very well with that. But they actually have a chess app, but they're doing very well on chess, and they're also launching math. And the whole idea is that could you disrupt education? Could you disrupt earlier year educations with an app like Duolingo? That's the whole long-term thesis. That's why some people compare Duolingo to a potentially very large company someday. That could be the size of a company like a Netflix, for example. Another way to describe Duolingo that I've described it in the past is a very addictive app. People are very addicted to it. It's very addictive. It makes learning addictive. That's what creates engagement. That's what allows them to print ads and make money that way. So that's also one big deal about Duolingo. Okay, let's talk about the next one, Kaspi. So Kaspi is a very nice stock. I'm going to keep making that joke. But anyways, Kaspi is the Kazakhstan super app, the super app of Kazakhstan. You can do everything on their app there. You can do the driver license, marriage license, title, insurance, banking, and e-commerce. Kaspi used to be a bank who became an e-commerce super app. And it's just the Kazakh super app, and they have a major market share over there. And this is why I always say when I talk about Kaspi, the EBITDA margin, that's not a typo. That's the actual EBITDA margin that they do. And they're predicted to grow at 32%. EBITDA margin is 70%. It's the super app of Kazakhstan. They bought Hepsi, which is a Turkish app. And they're trying to do the same playbook in Turkey. The revenue growth for Kaspi has been unabated. I like it very much. It's very similar to what you would say a Meli or a Xpeng, for example, but much earlier in the life cycle of that business over there. And it's an exposure to a region of the world that I think very few people have. And the stock has been relatively stable, fairly stable. Only downside is it pays a dividend for some reason over there. It's what they do. So it pays a nearly 5% dividend. So that's one thing that they do. I'd rather see them reinvest in growth. But because they're making so much cash and because they're already growing fast, I guess they feel like they can pay a dividend. And so that's Kaspi for you. The third one is ONON. So I actually updated my spreadsheet about all the apparel stocks today, and it's true that ONON seems like the only one that's a good deal. If you look at Nike, predicted to have a drop in sales. If you look at Lululemon, the sales are flat. It seems like ONON is the one company that looks the cheapest in my spreadsheet on a growth-adjusted basis. EV over GP over RG is a 0.18. The rule of 40 is a 42. and the revenue growth of this company has been absolutely stellar. Not a dent in the road, just stellar revenue growth. Very productive stores sold everywhere. Expensive shoes with a lot of high margins, 64%. And the shoes almost sometimes could be seen as like a status symbol in some of the running circles, etc. So very, very expensive product, very cheap stock in my view. At a 0.18, that's very cheap. The reason for the recent drop in this stock has to do with CEO change. They went to through a CEO change, and the return of the founders. The founders are coming back at the helm of the business. So that could explain some of the turmoil in the company. And of course, it's a growth stocks, and interest rates are going up, and so all growth stocks are going down. That's the other part of that. And the last stock that I want to discuss here is Xpeng. Xpeng, it has seasonal weakness, of course, because of Q1 in the auto business. Q4 tends to be very good, but Xpeng is actually predicted to grow their sales quite a bit the next 12 months, thanks to their European expansion. Xpeng going after a lot of European countries, a lot of new exciting cars from Xpeng. Of course, what is Xpeng? Xpeng is a Chinese electric car maker. I would argue it has a lot of similarities with Tesla, and in fact, when Xpeng was trading at $28, that's when people were really noticing the bots. And Xpeng has one of the most interesting humanoid bots out there. I would say at least in the Chinese market. The CEO of Xpeng is a big Elon Musk fan, and it seems like a lot of what he does is aligned with what Elon Musk does. Seems to be a very inspirational company in China. Of course, that's not the reason why I like Xpeng. Why do I like Xpeng? I like Xpeng because it's cheap. It's very, very cheap. Enterprise value over gross profit over revenue growth is a 0.17. Rule of 40 is a 48. The company EBITDA margin is not quite there just yet. We're still losing a little bit of money. I put it at 1% just because my spreadsheet won't compute if I put anything lower than that. But this company cannot be yet measured by EV over EBITDA. But if you look over revenue, we're trading at 1 times revenue. The stock is down 29% over the past 52 weeks, way more if you look at the past 6 months. And I don't understand why, because they are essentially profitable. Gross margin is 21%. Vehicle margin, profit level vehicle margin, they have this metric in their call is something like 12%. So to me, this is a soon to be profitable on the bottom line EV maker. But the unit economics are there. They just need to scale, and they appear to be scaling. A lot of analysts are saying sales in Europe could grow up by more than 100% in 2026. So this one is very cheap, under the radar. Of course, Chinese stock, and many of you don't want to touch Chinese stocks, and I understand there's been issues in the past with Chinese stocks, but nonetheless, quite an interesting one. So these are the four stocks I'm looking on right now: Duolingo, Kaspi, ONON, and Xpeng. Anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.